What's going on, everybody? We're going to start here in about, I would say, 3 minutes. Let's let everybody hop on. What's going on, guys? What's going on? What is going on, everybody? Do apologize for earlier. I was trying to figure out what was going on specifically with the webinar or with the live stream, guys. I was trying to figure out what was going on, and for some odd reason, I couldn't get the live stream to work, and I was streaming, and I was wondering why nobody was able to hop on. So I'm going to go back with the tech team to try to figure out what exactly happened and what exactly is going on and how we can fix it, guys. So real quick, I'm going to record this session here. And what we'll do right now is we'll just run the sessions live here. And then the next, obviously, session is going to be on GFU Live. Just for the meantime right now, we're going to host this on here. And we're going to keep it moving forward. So I know last call, I didn't necessarily record everything, or I wasn't able to go through the entire PowerPoint or the entire slideshow. So what we're going to do is we're going to go through the entire slideshow here today. But firstly, I kind of want to look a little bit at like crypto. I know that some of you guys are maybe new. Some of you guys have been trading for a while, or kind of want to look at the price of Bitcoin to kind of see where it's going and what it's doing. So let me just, start this off by sharing my screen. And then what we'll do is we'll go over the rest of the slideshow. Because right now I'm just going to show you guys kind of what I'm looking at with Bitcoin. I did call this specifically on the last call in the last session. Well, not this session, but a session I did with in a free webinar. So I'm still looking at BTC. I did see that obviously BTC went to its low. So I want to show you guys something, because obviously we look at BTC in terms of cycles, right? And obviously this was the 2020 cycle that we all went through. And then we had the bear market really hit us from 2022 all the way up until 2023, right? And if we look at the weekly now, okay, with the ETF now approved, you have the ETF approval here, kind of like a buy the rumor, sell the news type of vibe. And now we're on this projected bull run. If you see market structure here, what did we have? Okay, we had a bunch of accumulation, okay, really compile right around here, right? We had accumulation compile here. This is where everybody was really buying. The banks were buying. There was a bunch of accumulation happening. Okay. I would say this area between 25,000 and all the way to the $16,000 mark. And then we had a breakout. We broke this indecisional smart money area, this buying and selling pressure area, okay, in a lower time frame daily area, which officially back here. Just up for you guys. We broke this area on the daily, and that officially, okay, brought us into the bull market. You know, we tapped it over the last couple of months. You know, in April we tapped it. I know the July 2023 we tapped it a bit. I was looking for one more bearish run here, and then we finally broke through. And once we broke through 31,000, that immediately put us now into this bull market. Okay. And now this next area here, right? I'm going to show you guys something. This is the way that I trade. I trade Elliott wave. I trade impulse and correction moves, right? So you have the breakout of accumulation. You have impulse here. You have a correction. Okay. You have another impulse here from the high to the low. Okay. And then you have a similar correction move happen right here, right? So what I'm looking for specifically, okay, with BTC, at least on a smaller scale, I want to see it move lower, but obviously you're going to have buying and selling opportunities. One of the best buying opportunities just passed at 38,000. But we got some good news, and that is that right now we are still in that correction. We haven't really moved higher. I mean, on the lower time frames here, I'm going into the 4-hour. Okay, we did break structure here, so technically this is bullish. This is very bullish. We broke this structure, so now we want to start looking for buys. But where would the $1 million question is, John? Well, where do I want to buy? Okay, we have an indecisional area here. If price gets to this zone, start looking for buy orders here. Okay, it's a safe buy order. Or one of my honestly favorite buy orders would be this order block here on one of the lower time frames here. Okay, and then possibly we could retest this area here. It's all going to depend on fundamentals. It's all going to depend on fundamentals. We have one wave, impulse correction. We have another second wave. Now, why I'm a little worried, and I'm not buying Bitcoin right now. This is the only reason I'm not. Tomorrow is going to be, okay, NFP. So if you look over here, we have Forex Factory, right? We have some big news happening tomorrow specifically. Okay, and that's going to be the non-farm payment rule. Just realize that right now what kind of environment are we in terms of sentiment? And I'm sorry if I'm being a little complicated here. I don't want to be too complicated in the call, but what is the sentiment right now in the market? Okay, the sentiment in the market right now is that we are in a inflation fearing sentiment, an inflation fearing market. So what does that mean? When all this was happening, I'm going to give you guys a history lesson or a lesson on what controls the market and what controls basically the entire, I would even say cryptocurrency market in a way, because it controls all markets. It controls gold, it controls US 30, it controls everything, right? Does it make sense? But BTC, if you aren't buying thousands of dollars, I mean, you can margin trade BTC. Okay. So now what was happening here? Okay. What was happening here during this huge bull run? Okay. What was actually happening on an economic standpoint? On an economic standpoint, what was happening was the federal government was cutting rates. Okay. Rates were going down, right? We're going to put rates here. Okay. Excuse my chicken, okay, writing. I'm sorry, but this was rates. Okay, now what are rates? Rates are essentially, I would say, the ability or the percentage of where businesses can go out there and acquire loans. So let's say I'm a business. I run a big business, big corporation. Okay, I'm going to get a loan for that business, and that business loan is going to stimulate my business, which by default is going to stimulate, okay, my products and service to be able to expand that business. It's going to increase sales and production, and that's going to increase jobs. Okay, and by default, me increasing jobs means that more people are going to get paid from my business, and this cycle is going to boost the economy, right? The more money I can have, the more money I can make, right? But the more money I qualify to be able to take out if the rates are very low. So if the rates right now, for example, let's say the current rate is 5%, which is pretty high. Well, imagine now making the rates 2%. Okay, let's say it's 5% right now. Imagine making it 3%. Now you might be like, well, that doesn't mean a lot. Well, it does. The difference between a 5 to 3% interest rate on a business loan, okay, is astronomical. Okay, it could be the difference between qualifying, okay, for $1 million or qualifying for $1.3 million. Okay, you see the difference. Now, why is this important? Why am I talking about this? What does this have anything to do with the cryptocurrency market? This is why crypto is going to boom. I'm giving you the process of why crypto is going to boom and when you need to take your money out. Okay, because a lot of people here held. Okay, you know that hodl mentality, and the reason they hodled was because they didn't understand the fundamentals. Okay, and I'm going to tell you when it's going to boom and why it's going to boom. Okay, and for how long it's going to boom. All right, so at 5%, now they stimulated the economy, and that's when every market started going up. Gold started going up. Okay, the Dow started going up. Oil started going up. Everything was going up. We were living in this fake society where there was constant printing of money, because when they're lowering rates, what are they doing? They're also stimulating the economy. They're printing more money. There's quantitative easing that's happening in the market. Okay, they did this 5% to 4% to then 3%, from 3% to then 2% to 1%. And at one point, we were at like 0%. People are like 0%. How is that even freaking possible? We were at 0% at one point. Okay. And when this happens, okay, everybody started making money. Okay, you could have been an idiot and you could have made money in the bull market. You could have bought anything and you were making money. All right. But what happens when rates go down? It stimulates the economy. So the economy, let's do this right here. The economy starts to go up. But why does the economy go up? Because companies, okay, they have better projections. They go up in value. But why do companies go up in value? It's because of production. Okay, production and sales go up in value. Okay, and because of production and sales going up in value, jobs are going up in value. Okay, so now we have jobs going up, we have production and sales going up, we have companies hitting record-breaking quote-unquote numbers, and you have a thriving economy. That's what was happening, okay, during the pandemic of 2020, all the way up until 2022. Then we hit the peak here around November. Okay, November of 2021. Then what happened? Okay, what happened was, I'll tell you exactly. We had all this stimulation, all this growth that was happening. And long story short, what ended up happening was pretty crazy. And we teach this, right, in this fundamental boot camp that I have. As all this is going up, what's another problem that's going up? Because our loans are down, okay, unemployment rate is going down, okay, unemployment rate is going down, but one thing that's going up, which is the scariest thing, and that's this thing called inflation, okay, inflation, which controls the entire economy. Because the economy's always battling recession fears or inflation fears. Inflation sentiment or recession sentiment. And what's happening? Okay. Inflation's going up, man. You know, before the pandemic, the average inflation was 1.8%. What does that mean? That means your buying power every year okay, dies by 1.8%. 1.8% is your buying power. So every year, that means that 1.8% of your buying power, your dollar, loses value. Okay, this is pretty well known. And this is kind of considered, in most people's eyes, healthy. Okay. I'm going to teach you guys something here that most people, I never got taught, that I had to go to multiple different other sources to figure out. Okay. But what happens is when you have money printing, you have unemployment down. Okay. You have rates going down. Okay. You have a boosting economy. You have boosting company numbers. You have boosting company sales and production, and then you have a boosting job market. You now battle this thing called inflation. And during this whole time period, we printed trillions of dollars because of quantitative easing. And what? We were quantitative easing and printing money and lowering rates, giving out loans at record numbers. So what ended up happening? Okay. This is a very valuable lesson. What ended up happening was our inflation went from 1.8 to then 2 to then 3% to then 4% to then 5%. And you can see this in the CPI numbers. And this is all of 2023. And it hit the peak like right around here, right around like June, all the way up to, I think one of the highest numbers I saw was like 8.9, almost 9%. Now, some of you guys are like, well, 8.99% isn't that bad. That's absolutely disgusting. Considering that the inflation number doesn't account for cost of living. Okay. It doesn't account for cost of living. That inflation number doesn't account for gas. So it doesn't account for rent, which is cost of living. It doesn't account for gas. Okay. And it also doesn't fucking account for, I'm sorry for my language. Okay. It doesn't account for food. So if we actually combine food, gas, and rent, the total inflation number wasn't 8.9. I think it was around, bro, at least 14%. At least 14%. Some of you guys feel this today, don't you? Drop some 777s in the chat if you feel inflation, okay, from 2020 all the way until now. Do you feel things are more expensive? Do you think rent is more expensive? Drop something in the chat. Drop some, let me see if you guys can chat here. All right. Do you guys feel this? Do you guys feel the inflation? Yes or no? Drop some 777 in the chat. Okay, perfect. So why that's important, I'm going to teach you guys something here, is because most people are feeling this. And long story short, this is dangerous because in 10 years, that 8.9 or 9% means that 90%, around 90% of your US dollar in 10 years, okay, has lost its value. Can you fucking believe that? Imagine like the price of bread being almost double the price in 10 years. So like, imagine the price of, or 10x of that. Like, imagine the price, imagine the price of a car going from like 30,000, a brand new one, to like even 70,000, 80,000, 100,000. Okay. Imagine that. You know, there's certain places in certain countries in the world where you don't have to imagine that. That's actually the reality. You know, like Argentina just went through like 180% inflation and there was riots on the streets. So why am I talking about this? Why is this important? Is because everything is backed up by the US dollar. Okay. So the US dollar, if the US dollar goes bad and goes through inflation, every other country like the European Union in foreign relations, like even Latin America, that rely heavy on the dollar presence, feels it times, let's say, one, feels it times two. So while we were going through inflation in America, okay, the inflation in Europe and the inflation in South America, all over the world was feeling it way worse. You know, there's some places that had 15, 20% inflation in Europe. Okay, it was very, very bad. Now, what can the Fed do in order to relieve this inflation here because we printed too much money? It's kind of like, you ever see that movie, that Hangover movie? You know, when Bradley Cooper, they're on the side of the road, okay? And they just tried to look for I think it was Greg, or what his name was. Yeah, Greg. They're trying to look for his friend Greg. Okay, they're pulling to the side, they're all messed up. Okay, he's giving his Greg's fiance a call because he's gonna be late for the wedding, and he's telling him like, yo, we fucked up. Okay. We messed up. Okay, that's kind of what happened here. This got insane. This was way too high. Okay, so what the Fed did was they immediately said, okay, well, there's one thing that we can tackle. There's one thing we can do to save the economy, because if we do not stop this inflation, we're going to lose foreign relations, and we're going to lose our relationships, because they're getting pressure from NATO, and they're getting pressure from the European Union. They're getting pressure from all over the world that like, yo, the inflation's bad. Like, you guys either stop it, or we're going to go run to another currency, which is possible. And then war could break out. It's just crazy. So what do? They say, okay, screw it. What we're going to do is we're going to hike rates. So we went from rates all the way at like 0%, which was like historic. It's never happened in freaking history, all the way over to building rates up to like 5.8%, right? Super high and even high, right? And we increased it. We made it more expensive to borrow money. Now, naturally, what does this do? This creates more expenses. So businesses have a harder time making money. By default, if businesses have a harder time making money and reevaluations go down, they start to produce less, and the supply becomes lower. They start to produce less, supply becomes lower, while sales naturally go down. Sales naturally go down, naturally jobs start to go down. And then job cuts start to happen, and the economy starts going through it. So it's getting pushed, and the economy starts slowly going downhill. Okay, we push rates high. Why is this important? Because if you guys look at these specific years, okay, if you look at this year right here, between 2022 all the way over even to the bottom of December of 2022, this was all them hiking rates. If you go from here in this Bitcoin chart, okay, this is when they announced it. This big drop happened when they announced that they were going to start hiking rates next year. Okay, all the way to here were them hiking rates. One whole year of just blood on the streets for crypto. One whole year. Even more accumulation. Right? So why that ended up happening was because there was inflation fears. The market was now not in a recession fearing environment. It was more in an inflation fearing environment. The sentiment is always moving back and forth. Now, why is that important? Now we're at super high rates. We're at like over 5%. And now the Fed recently announced the reason why the market's booming is because a couple months ago, okay, in November, October, there was an announcement that we were no longer going to hike rates. So you see this bullish impulse move on Bitcoin when it jumped from in September to 27,000 all the way to this $50,000 mark. This is all based off of pricing, the market being priced in. The market is never the current price. It's always the future price. I need you to remember that. Okay, on a fundamental standpoint. So the market's never the current price, it's always the future price. And what ended up happening was because it was announced that we're no longer going to hike rates. Everybody thought we were going to what? Cut rates. And cutting rates, what did cutting rates do last time to Bitcoin? This is what it did. Look what happened in Bitcoin. Look at what happened to the market. Last time we cut rates, we were living on heaven on earth, because what happens is it starts to stimulate companies, which stimulate production and sales, which stimulate jobs, and it stimulates the economy. Okay? So everybody's excited. This is what you need to look out for on this next bull run. Okay? Right now, tomorrow, today, I mean, FOMC yesterday was so-so. Because in November and December, the Fed, who controls interest rates, the interest rate market controls everything, they said that they were going to cut rates 6 times this year. Okay, what does that mean? That means it's a fucking bull market, man. That means that everything's going to go up, which is why the markets have been going crazy in the last month of December. But one problem we're having now is inflation went from 8.9 and it was going down. We were going back in a downtrend, okay, to like 6, from 6 to 5, from 5 to 4, and then we hit 3. And the Fed said our goal is to go to under 2. Well, the problem is we almost hit 2, but inflation started going up again. It went from 3.2 to 3.5 to then 3. Now we're at 3.8. Uh-oh, we're going back to like 4 almost. This is where we are. And remember, we can't have above 3. We need to save the dollar, because in reality, in 10 years, if we're at 3.8 right now, in 10 years, 38% of our US dollar is worthless. Okay? So what do we need to do as the Fed? Or as the Fed, we can't cut rates now. And that's what they said in the last meeting on Wednesday. They said we can't cut rates. We have to keep them high. We have to keep them this high, above 5%. Why? Because the economy is coming back. The US economy is so strong. People are still spending money. It's crazy. So we need to bring this down to 3.8 to 2. And how are we going to do that? Keeping rates high. And it's almost as if they don't want to say this. They'll never say this, but they want more people to get laid off. They want more production and sales to go down. And they want companies to suffer. And they want the economy to go down. So that way we can freaking solve the problem of inflation. They're never going to say this to you, but they need it to. And it's because, okay, we have a bad economy for a short amount of period of time. It's a cycle to save the dollar, or we lose the dollar as a world global currency. Which one is worse? Losing the dollar would legitimately, okay, create World War III. So they'd rather us self-implode on our own economy a little bit for a short amount of period of time for us to take the hit than for us to lose the dollar. So the 3.8%, the Fed said, well, we're going to have to probably keep interest rates high. And what did that do to markets yesterday? It dipped markets yesterday. Okay. And now markets are slowly recovering, but it dipped markets yesterday. Why is this important for Bitcoin? Okay. Well, tomorrow is going to be NFP, non-farm payment law. And this is what I'm going to tell you right now. If NFP tomorrow, if the sales or if the total unemployment change comes out higher than expected, which means more people or less people are essentially working and there's more unemployed people, that is actually a good thing for the market. Why? In a sentimental analysis level, because the market prices everything in, that means that if we have a bad economy, more people are getting fired, the unemployment rate is higher, that's a good thing. That's a good thing because the market is going to price in, okay, well, the Fed is wrong. The economy actually is suffering and is going down. So that means the Fed's they're going to cut rates soon. They're going to cut rates soon. The problem is now, okay, this is where the big problem might come in, is because inflation's going higher, it means that companies, jobs, production, and sales are super strong. If tomorrow the unemployment rate comes out lower than expected, markets are going to tank. And the reason markets are going to tank is because the markets are coming out lower than expected, okay, which means that, okay, the economy is good, companies are good, production and sales are good, jobs are good, and by default, what that means is, inflation is probably good. Inflation's probably going higher than where it is right now, but we're higher than 3.8%. So that is going to entice the Fed to either keep it at 5% rate or hike it even higher. And that would make markets correct and bleed. And if that happens, okay, which I hope it does, because it'll give us a better entry on BTC. I called 38 and this area here. But if that happens, okay, what that could mean is we could see BTC fill this area here, 34,000, okay, on a fundamental level, or go back into this 38,000, and I hope it goes to 34,000, right? We could see it if inflation comes back and the Fed randomly decides to hike. This is a possibility. This is definitely a possibility, okay? Now, I don't want to think negatively on the economy and the markets, but you always want to bet with them, and we're on an uptrend. So even if the market does go down to 37 or goes down to 34,000, it's going to be a great thing because I'm going to be just looking for dollar cost averaging into Bitcoin and buying Bitcoin and looking for entries. Because long term, I know Bitcoin's going to go higher. Okay. I'm going to give you guys some future taking profit in 2026 advice. Not advice, but I'm not legally allowed to give you financial advice. So this is what I'm doing. I'm going to accumulate more cryptocurrency here because I know where it's going. But more importantly than that, I'm going to keep accumulating, keep accumulating. And I hope inflation can go below 2%. Once the inflation goes below 2% and the Fed starts cutting rates again, it's going to be, okay, heaven on earth again. We're going to see a massive boom like this. Okay. Whatever move you saw here, you're probably going to see that same move happen here. Okay. And we're looking at 80,000, 100,000 plus. Okay. But this is why this is important. When the Fed starts cutting rates, it's just going to create massive booms in the market like it did here. Booms, 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 booms. Now, this is the next advice on taking profit. When the Fed finally starts cutting rates on this next cycle, you're going to see the economy boom. All stocks are going to hit record highs. Golds are going to hit record highs. All that shit is going to happen. But I want you to remember, the party doesn't last forever. And once we get below 2% inflation and inflation starts to go higher and higher and higher, okay, the Fed might ignore it or whatever might happen. But then the Fed is going to start hiking rates. And when the Fed announces that they're going to start hiking rates again in 2026, 2027, that is when you start taking profit, and you take profit at the high. Everyone is going to tell you in 2026, 2025, Bitcoin to the moon, Bitcoin to 1 million, Bitcoin to this, Ethereum to 10,000. They're going to convince you you're an idiot for selling now. Okay. But if you watch the Fed meeting, keep inflation in mind. There's one thing I want you guys to know on a fundamental level. Always keep an eye on the inflation report, and always keep an eye on what the Fed is doing and the interest rates. If you pay attention to that, you'll win in the market no matter what. Because those two things price the market in on a fundamental level, and it's what moves banks and institutions into the market and then out of the market. The technicals give you the entries. The fundamentals get you in the market for years and months of profits. It gives you the trend. So once that happens, when the Fed starts to cut rates or starts to hike rates on this next cycle, that's when you get out, and you get out at the top at like $110,000, $120,000 a point. And that's when you get out. And then we short the market like I did here. I shorted the market here the whole year of 2022. And I made bank. Okay, I made bank shorting. Okay, I felt like Michael Burry. And that is going to be our game plan here. So right now with NFP tomorrow, we're gonna steam. If the, like I said, I already told you guys what's gonna happen if the inflation, if the job reports come out positive or negative. What I see happening with DXY, this is why I'm a very big fan of DXY. I see DXY right now dropping. I think it already swiped these highs here. But overall, I see DXY going here. NFP tomorrow could swipe this high again and then have this drop. But I do see DXY going here. We see DXY go here. Gold's going to hit all 2100, and BTC tomorrow is going to have a run and will probably break, okay, this high. If the NFP report comes out positive, there's nothing stopping BTC tomorrow. BTC will go back to 48, 47,000. So keep an eye out for that news report. And remember, on a fundamental level, what I gave you guys a strategy, okay, for BTC, not to use BTC for not just to get into BTC for the buy and why we're buying. I'm telling you guys why we're buying, why we're selling, and when you're going to be able to buy it low. And I'm going to tell you when the top is going, not the top is going to be, but I'm telling you when and why the top is going to be the top. And the biggest reason is going to be because of those interest rates. Okay. And what the plan is of the future in those announcements. So make sure you tune into, like I said, you study fundamentals. I'm going to probably make a small, course in the GFU live stream for fundamentals. But if you did get value on this, drop some 777s in the chat. Okay, drop some 777s in the chat if you got some value from this. Okay, or drop some 999s in the chat. I appreciate every single one of you guys for hopping on, even though, okay, I was super late. But I appreciate you guys. And guess what? On the next call, on next week, what we're going to do is we're going to go over the 10 different ways to make money in crypto in depth. And yes, I will drop the recording. I'm going to upload it on YouTube. And see you guys on the next one. Talk to you guys soon. Peace.